Elon Musk's mind-blowing FSD update, GM panned for new Escalade IQ pricing, Rivian, Lucid, diverge in Q2, and more. Biggest EV stories of the week.
Is this a surprise that we see more price cutting from Tesla in China?
Yeah, let's focus in on Tesla and what is going on there. We already, of course, have seen a lot of back and forth price cuts in China, sparked initially by Tesla. It looks like that they are cutting the priciest models of their various vehicles.
All that and more, so let's get to it. Tesla stock had a rocky start today with some news about cutting prices on their Model Ys in China. More on that in a moment. As you can see, the stock has rebounded significantly. I missed my opportunity to grab a call option at the bottom of that. Methinks I got a little too ambitious on my bid, and by the time I figured it out, I'd missed the opportunity. So now I'm in a wait and see mode. Elon Musk's mind-blowing FSD update, GM panned for new Escalade IQ pricing, Rivian, Lucid, diverge in Q2, and more. Biggest EV stories of the week. Electric vehicle stocks went into a tailspin in the week that ended on August 1st as the broader market wilted under the weight of inflation worries. Stocks also reacted to earnings news from the space. Here are the key events that happened in the EV space during the week. Tesla CFO departure, Pepsi's testimony, and more. The news concerning the resignation of Tesla's master of coin, Zachary Kirkhorn, came as a bolt out of the blue. Although Techno King Elon Musk's tweet did not suggest any kind of disagreement between the departing executive and the company, the wording of Kirkhorn's announcement led to speculation that there could be more than meets the eye. Future Fund's Gary Black suggested there could have been disagreements on some aspects of the company's strategy related to price cuts, margins, and even secession. No doubt there was probably some amount of friction that led to Zach Kirkhorn's departure, but in the long run, I'm sure there'll be no bad blood between the two. Beverage giant PepsiCo's transformation and strategy director Amanda DeVos said this week that Tesla Semi is among the most crucial components to the company's business practices. She added that the company and the employees have quickly adapted to the ever-changing landscape in commercial logistics. PepsiCo bought 21 Semi-Class 8 trucks from Tesla in December 2022 as part of the company's green energy drive. More on that to come on Tesla's Throwback Thursday. When one Tesla influence wondered about the wider availability of the EV maker's latest version of the full self-driving software, Musk said Friday that version 11.4.7 would likely go for a wider release within a week. He also said that V12 is almost a total rewrite and is currently being tested by the company's QA drivers. Quote, "Too much new code to go to the public yet, but it is mind-blowing in my opinion," end quote. Your boy's still rocking 11.3.6. Just toss me V12 and I'll use that motherfucker. Day. I'll sign a waiver, non-disclosure, whatever you need. Just give me V12. GM's new Cadillac EV launch raises eyebrows. Legacy automaker General Motors unveiled the electrified version of its Cadillac, the 2025 Cadillac Escalade IQ. Future Fund's Black expressed surprise at GM Cadillac's pricing strategy. While the Escalade IQ is priced at $130,000, a rival offering from Tesla with superior performance metrics cost only $108,000, he said. I'm with Gary on this one. Who in their right mind is going to spend $130,000 on an inferior product when they could easily get a Model X? Better performance, better functionality. That Escalade better be one stylish mother, especially if it's not going to come in underneath the Model X. Rivian, Lucid earnings. EV startups Rivian and Lucid reported earnings this week. Rivian's revenue and loss per share were better than the consensus estimates, and the company lifted its full-year target by a modest increment. Analysts were left impressed with the company's results. Dan Ives from Wedbush said Rivian remains one of the core EV players over the next decade. I sure hope so. Lucid's quarterly results disappointed, but the stock resisted a sell-off due to the company's maintaining its full-year guidance and allaying concerns regarding liquidity. Cruise, Waymo gets nod for expanded driverless operations in San Francisco. GM's Cruise and Alphabet's Waymo received the California Public Utility Commission's approval to add more vehicles and operate autonomously 24/7 throughout Old San Francisco. Deepwater Asset Management's Gene Munster sees Tesla and Waymo as the biggest beneficiaries of the wider adoption of self-driving technology. NIO rules out German partnership. NIO refuted rumors of striking a partnership with German luxury automaker Mercedes-Benz. The speculation of potential partnership gained ground after NIO's peer XPeng joined hands with Volkswagen as the Chinese EV makers continue to be increasingly competitive.
Is this a surprise that we see more price cutting from Tesla in China?
Yeah, we may have thought that we were done in China. You mentioned off the top sort of signs of abating. We even had a sort of curious announcement of an agreement among manufacturers to kind of call a truce, and that lasted all of a couple of days. I think what we learned in the sort of following weeks was, from Elon Musk himself talking about this idea that, price cuts, he would not rule out continuing to bring pricing down. He specifically was citing interest rates. I think rather than that being a factor in China, it's more a factor of just the amount of competition in that market, how competitive it is, how crowded it is, and how much the Chinese manufacturers in particular have really proven strong. I think BYD in particular is really bringing up an awful lot of volume and creating a lot of competitive pressure for Tesla to have to answer.
Right, it's really interesting to look at the way that the competitive pressure is the same and also different in different geographies. So why is there so much pricing pressure from this competitive environment then in China?
I think we're seeing a pattern of sort of, as costs come down, as input costs come down. We saw the last couple of years, not only the semiconductor crisis putting some pressure on companies, but also raw materials for batteries. So lithium and nickel prices in particular really being a difficult challenge for these companies to work through. Those prices have come back down. We've seen, with China having this huge lead in terms of getting a battery supply chain up and running, we tend to see, as prices come down, China, price is able to come down first. And so perhaps we see that spread to other markets.
So perhaps that spreads, which is interesting in terms of read across into Europe and elsewhere. So we've seen this weighing on the share prices of some of the manufacturers in China. Is there hope that this stabilizes just briefly then, Craig, from here?
If you're looking at Tesla, I think the big reason for hope in the next few months is, Tesla did announce that this quarter they were going to take some downtime at their plants globally. And so there's some hope that that is related to factory upgrades to make new versions of the Model 3. If they have some fresher product, perhaps that can support stronger pricing.
Several factors go into the pricing of a Tesla vehicle. There's no doubt Tesla could find the right price to maximize margins. And that would be great if they were like at max production, already producing 20 million vehicles a year. Finding that price to maximize margins would be ideal. But that's not where Tesla's at right now. Tesla is growing at an exponential rate, building factories all over the world. Once you have a battery electric vehicle that is designed for the lower middle class and lower class incomes, but does not skimp on technology and offers the same perks that you would have, game over. The rest of the auto manufacturers will be competing solely for second place.
Slashing prices again in China, the move by the automaker sparking concerns of fueling the bruising EV price war. Meanwhile, Goldman Sachs recommends Toyota Motor, given the company's strong EV potential.
What the potential after you? Show me something, Toyota. Show me anything.
Let's focus in on Tesla and what is going on there. We already, of course, have seen a lot of back and forth price cuts in China, sparked initially by Tesla. It looks like that they are cutting the priciest models of their various vehicles. Their long-range and performance versions of the Model Y are being cut, according to its Weibo account.
Model, yeah.
Julie saw that Y and immediately associated with Yahoo. That is a company gal.
For Model Y and the SUV that they've tried to continue to make sure that they have traction with, especially at that upper end, as you were mentioning, within China, highly competitive market where there's a lot of EV plays. That is exhibited through some of the targets that Toyota has, which was one of the reasons why Goldman Sachs was very bullish about the potential there, saying that the targets that they've set forth, 1.5 million by 2026 in terms of their EV potential there, and then 3.5 million by 2030. Now, if you're thinking, all right, well, what about Tesla? Now, internationally, Tesla has been looking at figures, at least as of last year in 2022, about 1.3 million. So all of these things considered and the markers that Tesla has already hit versus some of the targets that a Toyota has in China and more broadly as well. But then additionally, the plays from Ford, the plays from GM, there's going to be a ramping up of so much of the production of electric vehicles, the larger question is for the pricing strategy, and that gets us back to Tesla. They may be looking through the consumer environment right now and just saying, how do we slash prices enough to make sure that we're in garages or that we're in driveways to pull people into an ecosystem, and then the job is just retention and keeping them there, hopefully. And that could come in a myriad of different ways, but for Tesla, at least, that seems like what's at play with the strategy right now, too.
Ding, 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 ding. Tell him what he's won, Johnny. That's exactly what Tesla's doing while maintaining industry-leading margins. I can't stress that enough. All you do is drop the price a tad bit, and your demand, which Tesla can see in real time, vaults back up into where you want it to be. Butts in seats will equate to Tesla's long-term growth story. Sacrifice a little margin today to retain a recurring customer of your ecosystem and your software as a service. Sounds like a no-brainer to me.
Yeah, although there are questions about, to your point, about what it's going to mean for the margins here, and at least one analyst over at Evercore ISI said that these cuts in China could presage cuts in Europe and in the United States as well. Yeah. And remember, we already saw Tesla's production numbers coming out of China, shipments coming out of China down 31% in July. So that's something to keep in mind, too, when we're looking at all of these dynamics. And as you mentioned, the competition in the Chinese EV market is probably the fiercest of any EV market in the world right now. There are a lot of homegrown producers that it's just a totally different dynamic than it is here.
All of that kind of true. The numbers in China are down, but it is the major export hub of Tesla. They're shipping those Chinese vehicles, which are the cheapest, all around the world for higher margin. If you're producing the best product on the market, you have no worry for demand because there will always be a buyer for the best product on the market.
The dynamic is also government driven too. There are mandates now that have been steadily increasing for the past few years for auto manufacturers to have to produce and sell a certain amount of electric vehicles, and that moves higher every single year until they get to a set percentage that the government could either stand by or move even higher from that point. But it's all in order to have more of an environmentally conscious landscape, especially when it comes to auto production, and what had previously and historically all around the world been an issue within the internal combustion engine vehicles and the contribution to some of the greenhouse gas emissions there too.
Right.
Regardless of the government incentives that are happening around the world with the push to battery electric vehicles, the consumer will resist if the battery electric vehicle is not better than its internal combustion engine counterpart. The inconveniences of today, having to switch from something that you already know how to handle, you have to make the battery electric vehicle more compelling than that internal combustion engine. And that has been Tesla's mission since before all the government incentives. In conclusion, Zachary Kirkhorn is no longer the master coin at Tesla. PepsiCo loves the advantage of having the Tesla Semi in-house. FSD Beta is inching along, slowly but surely. Maybe it'll be solved by the end of this year. The Cadillac Escalade is hella pricey. Cruise and Waymo operating 24/7 in San Francisco. Dare I say, paving the way for Tesla FSD when it goes live. And Tesla continues to cut prices. Well, that's all I got for you today. Be easy. Peace.